Local trade is poised for a better day today after a tough week. The JSE broke a three-day losing streak on Thursday, pushed higher mainly by mining companies, while the rand firmed after the latest reading of the Federal Reserve's preferred measure for inflation was in line with the market expectations. Matete Thulare is the head of foreign exchange execution at Rand Merchant Bank and joins us now to look at the latest market news. Matete, good morning as always. Yesterday, we saw the rand strengthening to 19.19 to the dollar, and it reached an intraday best of 19.14. Talk us through its movements for the week and some of the factors that drove the moves.
Good morning, Iman, and I suppose, yes, you're very much right. The rand trading in a fairly wide and volatile range yesterday afternoon. I mean, we did firm up in the afternoon as investors, digested the mix of local and US data. On the day, we traded around 19.15 to around 19.32 against the dollar. Locally, the data was really mixed. We had the PPI numbers out for January. That came in at 4.7%, and that is up from December's 4% number that we had. And then also the trade number moved into a deficit for the month of January. That came at around 9.4 billion compared to the December number of around 15.6 billion. Now, in the US, like you said, the Fed's now preferred gauge of inflation did rise in January at the fastest pace in nearly a year, explaining why a lot of Fed officials are now taking a patient approach to cutting interest rates. Now, this morning, the rand gets underway at 19.16 to the dollar. After a very volatile week for the rand, I think we are going to look for some sort of consolidation. I think 19.15 to that 19.30 will be the levels that will be trading for the day.
So oil has inched higher ahead of OPEC plus supply decision, while gold is close to a one-month high. Help us make sense of those developments.
Look, I think the primary focus for the gold market is that it is headed for the strongest close in a month, especially after the Fed's preferred inflation gauge yesterday really did meeting the consensus forecast. But I think that is now keeping, the possibility of interest rate cuts later this year still on the table. We did see gold trading above that 2,040 an ounce. That is on track for a modest weekly gain and also the highest finish since the beginning of Feb. Now, although the US data is showing underlying inflation running at a really fast pace, the reading wasn't much of a surprise for the market, and it really did fail to dent, the broader disinflationary trend underpinning forecasts for a policy easing later this year. Now, lower interest rates really tend to benefit the gold market, but at this point in time, we do have a plethora of Fed officials that are coming to speak to the market today. So the markets will be watching for remarks from these Fed officials in terms of what's going to happen in terms of policy, and that will also filter through into the commodity market.
Yeah, and we've been watching that all week long as well. So Sanlam's key earnings metric, this is the cash net results from financial services, is expected to increase. The projections are between 15 and 25%. Talk us through that performance.
Yeah, so financial services provider, Sanlam, they are in the process of finalizing their financial results for the year ended 31st of December last year. Their trading update yesterday really provides an indication of the expected ranges for their headline earnings and also earnings attributable to equity holders in the group in accordance with the official listing requirements of the JSE. Now, their financial results will be released on the 7th of March, but some of the notable highlights that they have provided is the fact that, there's strong risk experience in the life insurance business. There has been a higher investment market levels and obviously overall book growth that is supported by asset-based revenue in the life and also investment management space. And also they've had improved performance from their credit portfolio backing that life insurance liabilities, but also they've seen higher loan advances in their Indian operations, which has obviously boosted their structuring earnings. So I think, the 7th of March when they release their results, it is going to be quite a good, decent set of results that they will be releasing.
Let's round it off and talk about the MTN Group, which is expecting its full-year profit to plunge by as much as 90%. What drove those declines?
Yeah, look, MTN, not a great set of updates, unfortunately, this morning. They're expecting their full-year profit to plunge by as much as 90%, as obviously the two devaluations in the Nigerian currency since June last year has hit their financial performance. The Naira has depreciated about 70% against the dollar since last year, June. And this was obviously in an effort by the central bank to unify the official and unofficial exchange rates. Now, the Nigerian, Naira's weakness has made it one of the world's worst performing currencies against the dollar in 2023. Now, if you just look at Nigeria for MTN, they have about 77 million customers in that country, and historically they have derived about a third of their earnings from Nigeria. Now, the scarcity of dollars in Nigeria has resulted in an exodus of a number of international businesses that need to repatriate funds from Nigeria. Now, MTN still anticipates to declare a dividend of around 3 rand against, 3 rand for a share for the year of 2023. But despite all of this, it is not looking great, especially when you think about the issues that are being faced in Nigeria on the back of this devaluation.
As always, appreciate your time and analysis, Matete Thulare. Thank you very much for joining us this morning.